Hi guys. Today we will analyze Amgen stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. Amgen has been a medium performer in the overall market. Some doubts are observed in the medium time frame, but recent action was positive. The long-term trend is still neutral, but the short-term trend is positive, so the stock is getting more and more appreciated by traders and investors. Support levels are around $228 and $220. The next support levels are around $210 and $200. Resistance level is around $244. The next resistance level is around $259. In the last month the stock has been trading between $214 and $244 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 3 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 3% per year, for last 5 years. We see that the average profit margin of the stock has been around 26% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 209% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Amgen Company: bad, average, and good. First scenario. Amgen will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 3%. Future profit margin would be low, 10%. Future free cash flow to net income rate would be low, 80%. In this case, the fair value of the stock today would be $155. Second scenario. Amgen will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 4%. Future profit margin would be average, 12%. Future free cash flow to net income rate would be average, 90%. In this case, the fair value of the stock today would be $210. Third scenario. Amgen will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 5%. Future profit margin would be high, 14%. Future free cash flow to net income rate would be high, 100%. In this case, the fair value of the stock today would be $277. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 10.28. Minimum rate of return. I will use 12%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Amgen, analysts forecast growth rate around 5% per year in next 5 years, and future P/E around 13. Again, I will use 3 different scenarios for Amgen Company: bad, average, and good. First scenario. Amgen will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 3%. Future P/E would be low, 15. In this case, the fair value of the stock today would be $73. Second scenario. Amgen will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 4%. Future PE would be average, 17. In this case, the fair value of the stock today would be $90. Third scenario. Amgen will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 5%. Future PE would be high, 19. In this case, the fair value of the stock today would be $109. As you can see, today the stock is overvalued, $232, even if we expect the company's high performance in future. All biotech stocks are risky. Amgen stock is less risky because it has a deep pipeline to support future revenue and earnings growth. I like the company and I want to have the stock in my portfolio, but I need an extra margin of safety. I will open a small position if the stock drops below $200. Company's strengths. Amgen is an American multinational biopharmaceutical company. One of the world's largest independent biotechnology companies, Amgen was established in California in 1980. Amgen has a deep pipeline to support future revenue and earnings growth. Many biotechs make their name off one blockbuster drug they have developed. Amgen has opted to branch out into different directions through its years in business, which has resulted in several blockbusters in the process. Amgen has 40 compounds at different phases of clinical development across various therapeutic areas like oncology, inflammation, and bone. Amgen's pipeline of drugs should more than offset any patent expirations in the coming years. Amgen's return on assets of 10% and return on equity of 88% are amongst the best returns of the industry. Amgen has a profit margin of 22%. This is amongst the best returns in the industry. The company is investing its strong cash flow into R&D and acquisitions. Amgen has a yearly dividend yield of 3.33% and the dividend is nicely growing with an annual growth rate of 10%. But keep in mind that 68% of the earnings are spent on the dividend. So, this is a pretty high payout ratio. Risks. Risks for Amgen include the high cost and long time horizon for the development of new biologic products. Development cycles for these products can extend for more than 10 years. The company also faces increased competition and pricing pressures for many products. Amgen also faces the risk that insurers and other payers may restrict reimbursement coverage of its drugs. In Europe and other overseas markets, national agencies typically make coverage decisions, with drug manufacturers negotiating for wider access and higher volume in return for lower pricing. Amgen has a lot of debt. It has one of the worst debt-to-equity ratios in its industry. Based on estimates for the next 5 years, Amgen will show a small growth in revenue. The revenue will grow only by 5% on average per year. In the coming 5 years, the earnings per share will grow only by 8% yearly. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.